Hey, what's going on everybody on YouTube? Steve here, Raiken Profit over at RaikenProfit.com. Hopefully you guys are having a fantastic day. In today's video, I want to share with you how I spent $94,300 in a single day paying my taxes and paying off an investment that helped to reduce my tax liability as well. So I want to share that with you guys and break down exactly how I spent $94,300 in a single day. And hopefully this will be able to kind of break down a couple tax things for you guys and investment ideas to help you guys out. And I also want to share with you my mindset on taxes and investments and kind of how it's been as an experience for me to pay so much money in a single day. So without further ado, if you're ready to rock and roll, smash that like button and let's get into the video. All right, so I actually had a really close friend of mine who I shared this breakdown to ask me a question. He said, Steve, doesn't it make you so angry? Doesn't it make you so upset that the government is taking almost 50% of your income? He says, you must be furious, you must be pissed off. And my response was a little different than other people's responses. The way I responded was essentially like this. I told him, listen, yes, it is kind of ridiculous how much money the government takes, and it is somewhat of a shame that, 40 to 50% of my income is going to the government. I have no control over it. But one thing I said was, listen, I am so grateful. I am so grateful to have this problem, the problem of making more money than I expected. And some of these payments are because I wasn't expecting to make so much income. So that's another story. But back to what I was saying, I'm so grateful to have this issue. A lot of people, they get upset and they get worked up and they say, screw the government, screw the IRS. I can't believe I got to pay state tax and then federal tax. And then, I've got sales tax and they're taking money out of my pocket left and right. And here's the deal, guys. You can either, one, complain, bitch, and moan and be angry with the system, and that's not going to help you at all. Or two, you can worry about things that you can control, like learning various strategies to reduce your tax liability. And that's my plan moving forward, because I could probably minimize some of these taxes based on either setting up an S corporation, because right now I'm running my businesses through LLCs, through investing in real estate properties, through setting up holding companies. There's a lot of various things out there, and I'm no accountant, I'm no CPA, so I do want to put that out there right now. This isn't tax or legal advice right now. This is just my opinion. I'm just a guy on the internet, so I'm just sharing what I know. But the point I'm trying to make is you could get mad and angry, or you could figure out strategies to reduce your liability. And when you might think to yourself, taxes isn't important, who cares, you pay taxes, it is what it is. It's not true at all. There's actually a lot of various things you can do to reduce your taxes. So that's something I'm gonna definitely be looking into in the future for 2018, my business structure, various investments that would reduce my tax liability, real estate. I'm actually gonna share with you a SEP IRA investment that I put money into that helped reduce my taxes by about $10,000. But with that being said, let's break down exactly how I spent $94,300 today, which is crazy. I never would imagine I'd be paying that much in taxes / investments in one day. But let's get into it, guys. So the first thing that I made a payment of $41,000 to was the federal government. It was called a 1040, and essentially what I have set up is estimated payments. So when you get to a certain point, you're going to want to start making estimated payments quarterly. So that's what I do. Every quarter I make an estimated payment, and it's based upon a safe harbor which is set up, which is essentially what your income was the last year. You could set up payments to pretty much be sufficient in terms of what you're going to owe at the end of the year. I ended up making so much more money than last year. I actually doubled what I thought I was going to make, that I was actually left with owing about $41,000 at the end of the year. So if my quarterly payments were on track, and if I made the same amount of money that I did in 2016, then I would have been cleared. Because in 2016 I was paying around, I think it was $4,400 to the federal government every 3 months, and I was paying $600 to the state, right, every 3 months. So I made a lot more money than I thought, so I owed the federal government $41,000 at the end of the year. So that's based upon my income and my profit, and when all was said and done, when all the pieces fell in place, I owed $41,000 in additional tax payment. So I made that payment through, I believe it was irs.gov. So a lot of people, like your accountant will give you little vouchers to send off. You can just pay it online. That's what I do. So I paid that $41,000. I think it was irs.gov. My second payment was again for 2017. So I made a lot more money than I thought I was gonna make. And there was obviously things I probably could have done, like various tax planning, things I could have done with my accountant, which I failed to do, to probably get that paid off, but it's no big deal. I had the money. I owed $7,000 to the state of Connecticut. So when you earn income, you're gonna be paying taxes to the feds, and you're also gonna be paying taxes to the state. So I paid $7,000 to the state of Connecticut plus $41,000 to the federal government. That was for my 2017 income due to the money that I made over what I thought I was gonna make. So that was $48,000 right there. So that was the first $48,000 out of the $94,000. The next payment that I made today, there was 2 estimated payments that I made. So I already explained that to you guys. When you sit down with your CPA or your accountant, you're gonna pretty much set up a safe harbor, which is gonna be based upon what your income was the year before. So based on my income for 2017, my safe harbor, my quarterly payment is coming to $16,000, actually $16,500. Not all these numbers are super accurate. This was like $41,700, but just to make the math a little easier, my safe harbor estimated tax payment was $16,000. Now you're thinking to yourself, what if I don't want to make estimated payments? From my understanding, based on your income and based on this safe harbor number, from my understanding, I could be wrong, but I believe you have to make estimated payments or you're gonna be subject to a penalty, right? I don't know if you guys watched Tanner J. Fox, his YouTube channel. He did over $2 million in 2017, and I don't think he was making his estimated tax payments, or it might have been way under his safe harbor, and he was fined. I think he ended up paying like $3,000 or $4,000 in additional fees. I think that was how much it was. But anyways, there's a penalty, I believe, if you don't pay your estimated taxes. For the federal government, $16,000 every 3 months I have to pay to be on track based on my income that I'm projecting for 2018. So I made that payment today, which is April 16th. I will make another payment in April, I think it's gonna be May or June 16th, I'll make another, and then in August, and then at the end of the year. So I will have 4 of those $16,000 payments, and I made one today. Also, I made another estimated payment for the first quarter to the state of Connecticut for $2,300. So this is gonna be exactly the same as my estimated Q1 payment to the feds, but it's gonna be going to the state based on my projected income, which, to be honest, this is actually not based on my projected income. It's based under the safe harbor of what I made in 2017. So if I do double my income, my goal actually was to make $480,000 profit in 2018. If I do earn that, which I'm confident I will, I'll probably owe another 60 or 70 at the end of the year. So that's pretty much what I have there. So that adds another 18 to it, which brought it to about 60,000 just in taxes. About 65,000 just in taxes, guys, which is crazy. And the last payment that I made today was actually an investment. So I actually put money into my Roth IRA. You guys might have heard of a Roth IRA. You might have heard of a SEP IRA. There's different IRAs. It's pretty much just a vehicle. It's like a tax shelter. So I actually had money in my Roth IRA, but my CPA told me I made too much money. And there's a certain rule. I think if you hit like 117,000 or 120,000, once you cross that, they actually don't let you put money into your Roth IRA anymore, from my understanding. So I actually had to pull that out. And you've got to be careful with pulling out money out of your Roth IRA, because a lot of times they're going to penalize you, which I did get a penalty for the interest that I had earned on my Roth IRA earnings. So there's some paperwork I've got to do there, but I invested $28,000 and change in my SEP IRA, which is essentially a retirement fund for people who are employers, self-employed people. So that's actually tax deductible. So the reason why, I don't know exactly how my accountant came to that number, but you can talk to your CPA about it. And we came to the figure that my max contribution that would actually best affect or lower my tax liability was $28,000. So all in all, he told me that by investing $28,000 into my SEP IRA, which is my retirement fund, and essentially that's just changing pockets. Instead of me having it in my bank, it's in my retirement fund, and then there's rules in terms of when you can pull it out. But that actually reduced my overall tax liability by $10,000. So this number would actually be $10,000 more minus the $28,000 if I didn't put that $28,000 in, because that reduced my overall profit, I believe. I'm not sure if I'm getting the terminology mixed up, but it helped me save $10,000 by putting $28,000 into my SEP IRA. So that's how I got the total of $94,300, guys. 2017 for feds and states, put in $41,000 to the feds, $7,000 to the state. Made my estimated tax payments to the government. To the feds, I paid $16,500. It says 16, but it was 16,500. I'm doing that quarterly. To the state, that was 2,300, and then the SEP IRA was 28,000. So that came to $94,300. What are a couple things that I could have done differently? One thing I could have done is set up an S or C Corp. What is it called? I don't know. I could have set up a corporation, and essentially, from my understanding, when you set up a corporation, you're paying yourself. I don't know if you're paying yourself dividends or how it works. I'll be honest, I really don't know, but I've heard a couple conversations, and it saves you on either self-employment, tax, or Medicare. I don't exactly know how it works, so I'm not even gonna pretend like I know, but I know setting up an S Corp can save you a little bit, but there's also more paperwork, there's more legal fees, and it just seemed like kind of like a pain in the butt to set up. Like, there's just more things you have to do, so I opted out of that. I probably could have saved probably $2,000 to $5,000 if I would have set up an S Corp. I'm trying to think of anything else off the top. I've heard of a lot of people setting up holding companies, and then you're paying the company and different things. Again, I'm not gonna sit here and pretend like I know what I'm talking about. I don't, but I've heard people talking about it. Project Life Mastery, Tanner J. Fox, discussing setting up holding companies. You can somehow save money. I know Endless Entrepreneurs, he was sending me a message the other day talking about using real estate as a tax shelter, and I know you can use depreciation to bring down your income and save money on taxes. But what I'm gonna be doing, like I said, is I'm gonna be spending my efforts not on complaining, not on bitching and moaning and whining, like, ah, crap, I spent freaking $94,000, like, that sucks. Like, it's a good problem to have. I'm making more and more money in my business. It's growing. This is a good problem to have, and I'm gonna spend my efforts talking to my CPA, researching, reading books, and figuring out what are positive actions I can take to reduce my tax liability. It's becoming something that's worth putting my time into, as you can see these numbers, and it might be the same case for you. So just want to break this down for you guys. Hopefully you found value in this video. Again, just a guy on the internet, I'm learning. Don't take my advice. Talk to a CPA, talk to a lawyer. They're gonna know what they're talking about. But this is my story. This is my tax situation. Hopefully yours was a little prettier than mine, but even if it was more, even if you paid $200,000-$400,000, you know, you're making money, and it's just part of the game. So super grateful to have this problem. Super grateful for all you guys watching me on YouTube. If you have any questions, drop a comment down below. If you enjoyed this video, smash that like button. Hit that bell notification up top to be notified of more videos. Hopefully you enjoyed the transparency. Leave a comment below, and I will talk to you guys in the next video. Peace.